The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Thank you for joining the ICON webinar. This is Remy Milan. I'll be your host this morning. Our featured speaker is Jessica Kleinschmidt, Corporate Counsel. Morning, Jessica.
Good morning, everybody.
We have our contact information up here, and we'll be showing it again at the end of the presentation. Feel free to make a note of our emails and our telephone numbers. We'd be more than glad to follow up with you after the session if there's anything that comes up that we don't have time to cover this morning. So a quick review of our agenda. We'll cover regulatory update, what ICON is doing in particular around California SB 459, and then have a chance for some question and answer, and then wrap up. We know that everyone's really busy, so we plan to cover the essential topics in the first 25 minutes. We'll certainly be glad to stay around if there's other questions that people have, but we'll try and make sure all the good stuff gets covered as quickly as possible. And then finally, just making sure that you see the webinar controls on your screen. You'll have an opportunity to use the chat window. You can send chat messages to us if you have questions during the presentation. And then we'll come around and look at those in the Q&A session. And then the voice information, whether you're dialing in or using your computers, mic and speakers, so it's information there, as well as some information about the presenters. Okay, and with that, let me turn it over to Jessica.
Good morning, everyone. I know that our audience is comprised of mostly individuals that are very familiar with independent contractor compliance. So I'll keep my introductory remarks short. But this first slide I'm going to go over is about how active both the federal and state governments have been with regards to independent contractors over the last few years. A major thrust behind this activity has been the result of the current administration's focus on worker rights and ensuring that everyone who should be an employee is an employee and receives things like health benefits. Independent contractors, alternatively, don't receive items like health benefits, overtime, etc. So with that brief introduction, I'll go ahead and jump into some things that are going on, kind of at a high level, things that are going on across the federal and state governments and agencies. First off, I want to talk about the Internal Revenue Service. They've been very active in the last few years, primarily with the NRP, or the National Research Program. They're in the second year of the NRP. They've entered into information sharing agreements with nearly 40 states, so they're approaching full participation on those information sharing agreements. And just the same week that SB 459 was signed by Governor Brown, the IRS came out with their voluntary settlement program for independent contractor misclassification. Also at the federal level, we've got the Department of Labor. They've also been active, particularly active in the sense that the Department of Labor never audited before, and they are now auditing for independent contractor compliance. The Department of Labor, like the Internal Revenue Service, is also entering into information sharing agreements. Just earlier this week, adding their 11th state to their information sharing agreements list with Colorado. multiple California agencies have entered into information sharing agreements with the Department of Labor. Also, looking forward into 2012, the Department of Labor has a large budget amount set aside for worker rights issues and audit protection, etc. More specifically, within the wage and hour division of the Department of Labor, we have some heavy focus on the exempt versus non-exempt issue. Now, this is mainly because when someone's classified as an independent contractor, by default, they're exempt from overtime and the other provisions of the Fair Labor Standards Act, which is enforced by the Department of Labor. Finally, we have the Office of Federal Contract Compliance Programs, the OFCCP. So for those individuals in our audience that have contracts with the federal government, we've seen increased activity here as well. This agency is now auditing for worker classification compliance. And those organizations not in compliance are being placed on a new electronic blacklist, either losing current federal contracts or being prohibited from bidding on future government business. So now to get to what we're focusing on today is the activity of the states, in particular the state of California. The unemployment insurance agencies, the workers' compensation insurance agencies are all very heavily auditing, mainly as a result of the financial crisis of the last few years. They're very in desperate need of funds. They've entered into these information sharing agreements with the Department of Labor and IRS, so kind of bringing this concept full circle here. And specifically today we're focusing on the state of California Workers' Compensation Agency, which is the subject of SB 459. So before I dig in directly with SB 459, let's just talk about how active California has been with employment law legislation over the last year. First off, we had some legislation passed governing employee credit reports. All of these things I'm going to talk about take effect on January 1st. This was Assembly Bill 22. We also saw the Wage Theft Prevention Act, which governs some mandatory notices of payment. The reason I bring some of these things up is when I get to the last one, which is SB 459, keep in mind that if you've misclassified somebody as an independent contractor, all of these regulations that take effect on January 1st are going to apply retroactively to these people you misclassified. So it's a little bit of a snowball effect. So the next one is gender identity and gender expression discrimination. This was Assembly Bill 887. In the state of California, health benefits now need to be provided during pregnancy disability leave. This was Senate Bill 299. Mandatory contracts for commissioned employees. This is Assembly Bill 1396. This actually takes effect in January 1st of 2013. And finally, we've got these additional fines for willful misclassification, and that is Senate Bill 459, what we're here to chat about today. So first, let's talk about the who. SB 459 is going to be enforced by the California Labor and Workforce Development Agency. This is the agency in California that administers workers' compensation insurance and enforces issues surrounding workers' compensation. What SB 459 is additional penalties. So this is on top of existing penalties administered by the California Labor and Workforce Development Agency. It's $5,000 to $25,000 per violation. So it's not per worker. So if you make a multiple determinations over the course of the year, you have the potential to have multiple violations over the course of that same year. It also has what many people are calling a scarlet letter provision, requiring employers to place a public notice on the main page of the employer's website. When does it take effect? January 1st, 2012, in a few short weeks here, which is part of the reason we wanted to get in front of that deadline and provide a little bit of guidance on how to be in compliance with this legislation. I already talked a little bit about why the California Labor and Workforce Development Agency is so focused on this issue. A huge piece of it is money. Just the lack of funds to execute their initiative. And it also is that employee protection issue, making sure that those that should be covered by workers' compensation insurance are. So with such a short time frame in which to comply with this new legislation, I wanted to talk a little bit about the how and the challenges for implementing SB 459 in your organization. There isn't a whole lot of guidance in this piece of legislation. Willfulness classification is defined as willfulness classification. So there is no change in the definition or additional guidance on how to interpret the definition. Furthermore, the California test for workers' compensation insurance purposes is a completely different test than the Internal Revenue Service uses. So it's quite possible to have an individual that qualifies for Internal Revenue Service purposes or income tax purposes in general and would be an employee under the California Workers' Compensation regulation. A third challenge, particularly for organizations that have been active in acquiring companies over the last year, is the fact that SB 459 is going to impart responsibility upon the acquirer for the actions of the acquired company. So if you have an acquired company that was lax or intentionally misclassifying their independent contractors, that's something that has to get addressed in quite short order. So at this point, I want to hand it back over to Remy to talk a little bit about how ICON is working to address these challenges for our clients through a seamless solution.
Great. Thank you, Jessica. Boy, that's a lot of stuff that's changing. I was listening to that list of all the bills and regulations that go into effect on January 1st, and it's quite mind-boggling how busy the California legislative process has been. So one of the things that I'd like to cover quickly is how we at ICON have been approaching SB 459 in particular, but also just in general, the whole issue of staying on top of the regulatory changes. And what I'd like to do is just quickly take you through how we approach that. Some of this may be familiar. We have a number of people on the call who are clients of ICON. Some of this will be familiar, some of it may not be, but I'd like to just sort of recap it, and then we can, in the Q&A, discuss more details as people are interested to. One thing we find is very important for companies is to understand their position with respect to independent contractor misclassification and the risks attached to that. And a lot of organizations that we work with, often in the early stages of our client relationships, frequently tell us that they have a great deal of difficulty understanding their overall position, mostly because there's not been centralized visibility nor standard processes around engaging independent contractors. So one of the things that we recommend as a best practice for all of our clients and for anyone who's involved in contingent labor is to be able to do risk assessments of their position with respect to independent contractors.
So, and specifically with regards to SB 459, I think that risk assessment is particularly helpful in looking at companies that have been acquired recently to make sure that their practices aren't in violation of SB 459.
And beyond the risk assessment, the next sort of step in the process would be to make sure that you are consistently classifying your independent contractors. So it's important to have a consistent and objective classification process so that all your classifications are being done in the same way. As part of ICON's solution, we have IC Verify, which is a process and solution to address the need for a consistent, objective classification, which can be done very rapidly. Using IC Verify, we've actually provided classifications to clients for going on 15 years now, and we've never had one of our classifications overturned. So we have a lot of confidence in the process that we've developed and believe that a process like IC Verify becomes sort of a foundation for having a strong independent contractor program. And beyond that, of course, is maintaining records. The record keeping doesn't end with the classification step. There's a requirement to keep records for up to 7 years. So being able to access documentation and have that done in a consistent central way is also a very important part of protecting yourself in using independent contractors. And then finally, and this gets down to some of the issues that Jessica was raising a little bit earlier, IC Pay, which is part of ICON's solution, provides a number of tools to facilitate the billing and the management of purchase orders. But in our conversation today, a key part that IC Pay plays is in providing compliance with state requirements. So as Jessica was saying earlier, SB 459 is a great example of a situation where, for income tax purposes, someone may be classified as an independent contractor, but that may not be true for labor and workforce development purposes in California. And so you need a process by which you can keep track of the classification or the requirements of different agencies. IC Pay does that. So if you're using IC Pay, you'll find that all of these things are taken care of for you. So from our perspective, with SB 459 coming into the picture, it's really for us in many ways business as usual. While SB 459 raises the ante by having additional penalties, the issue that it's raising, the fact that classification isn't done in the same way by all the agencies who care about this topic, means that you still have the ongoing issue of how do I manage situations like SB 459. And so bringing this all together, we believe that ICON has got a very strong solution in place today for SB 459 and for all the other changes that are happening on January 1st. And so for our existing clients, it'll be business as normal. For people we're beginning to work with, a lot of people are very excited by what we're doing and are looking forward to working with us as they go into 2012. Okay. So this ends our prepared remarks for this morning. At this point, we'd like to turn it over to question and answer. We'll just go back and look at the chat log and see what questions have come in during the session, and then we can open it up to further questions.
So one question we have is regarding what an organization would do in the event that an independent contractor at the IRS level, in fact, does not qualify as an independent contractor for workers' compensation purposes here in California. So with regards to the slide that Remy just had up, with regards to IC Pay, what we would look at in that situation is issuing a 1099 to that individual, capturing that income for income tax purposes, and on the state level, go ahead and remit that workers' compensation premium for that individual for based upon the amounts they've been paid over the course of the year. So in that way, an organization does not lose the advantage of having that individual as an independent contractor from income tax purposes. However, for state workers' compensation purposes, that the organization would be covered.
Great, thanks, Jessica. We have one other question here. It looks like someone was asking about when you're just starting out. The question was, if I do a risk assessment and I start to understand my risk, do I incur any obligations to do anything about it? What happens when I learn something? Can I just say, okay, that's good to know, or what is it that I should be thinking about doing next?
Well, I think an important thing to recognize, whether or not something's learned during a risk assessment, is that there's always the possibility that when lack of compliance is found during an audit, that they could find that you should have known about it. So in those cases in particular, the risk assessment is going to enable you to learn about these problems and address them in advance of an auditing agency like the California Labor and Workforce Development Agency or the Internal Revenue Service from coming in and imparting that should have known requirement upon you.
Great. We have one other question that's come in the meantime, asking, will you please clarify again who is responsible for compliance in the instance of an acquisition?
So again, SB 459 transfers the intent of the acquired company to the acquirer. So let's say ABC company acquires XYZ company, and XYZ company was misclassifying their independent contractors. ABC company now owns XYZ company, and ABC company will be held liable for the actions of XYZ company, in this case, misclassification of those workers.
Right, so all the obligations and liabilities are transferred in the acquisition. Is that correct?
That's correct, and I think the impact of this, again, with all of these increased requirements on employers here in the state of California coming into effect in the new year, that classification decision has a lot of consequences. So, really looking closely at what the organizations you've acquired have been doing and bringing them into compliance early on in that acquisition process is really important. So, and that is something that ICON works on. Our current clients on the call know that have gone through acquisitions. That's something we work closely with our clients on.
Great. So just keeping an eye on the time, we have a couple of minutes left in our session. Wanted to find out if there was any last questions. So we'll go ahead and do a call for questions. Looks like we have some folks who are interested, so please feel free if you have a question to type in a question or to let us know through the chat panel what you are interested in talking about. So we have a question here. One more says, how far behind California are other states from getting to this level of inspection?
So in the field of employment law in general, we do typically see states like Massachusetts, New York, and California at the forefront of these legislative developments, and typically over the course of the next few years following developments by those kind of leading states, we see these developments expand across the country. So I think that within, particularly with the current administration's focus from a federal level on this issue, with states, 11 states having already entered into information sharing agreements with the Department of Labor, nearly 40 states having entered into information sharing agreements with the IRS, we're seeing this spread quite quickly across the country. So while I can't give a hard and fast timeline for other states passing similar legislation, I think that other states are not far behind.
So I think it seems to be another good example of where California is the bellwether, and what California does sets trends in the nation. Okay, so looking to see if there are any last questions. So one more question that just came in, and this will be our last question for the formal session today. With SB 459 regulations starting in 2012, how would this affect a current California Employment Division Department audit?
So the California Employment Development Department has been one of the most active auditing agencies over the last few years. And the California Employment Development Department is one of the agencies that has an information sharing agreement with the Department of Labor and the Internal Revenue Service. However, they also have an information sharing agreement with other California agencies. So if you're currently in an EDD audit here in the state of California, at the point that the results of that audit are finalized, the EDD is going to be sharing those with the Workers' Compensation Agency and the California Franchise Tax Board, along with the Internal Revenue Service and Department of Labor. So, you know, it's quite possible that that audit, if in the event that misclassification is found, it's quite possible that audit could, you know, result in a violation being found of SB 459.
Is there any retroactive penalty? SB 459 has retroactive provisions or not, Jessica?
It does not have retroactive provisions. However, in the case of the Employment Development Department, an ongoing audit, you know, potentially into the first quarter of 2012, if there was any continued misclassification found there, with all of this information sharing going on, you know, there could be potential exposure. But again, the actual act, the actual violation would have to occur in 2012.
In 2012 itself. Okay, great, thank you. Well, we'd like to thank everyone who joined us on the webinar today. This will be our closing of the formal session. We'll go ahead and put up our contact info again for myself and for Jessica. Please feel free to make a note of that and feel free to contact us if there are other questions you have about regulations and how we are addressing them here at ICON. Please feel free to reach out to us. We'd be delighted to follow up with you and have some further discussion. And again, thank you very much for joining us this morning.